If anyone misses the first part of it, then we will ship it out to you after the fact. But good afternoon, good evening, good night, wherever you are. Thanks for joining, and super excited to go through this presentation workshop with you all. Um, I hope it can be collaborative as well. So, consider any questions that you have in the chat for us at the end. We'll get to those at the end. But the main goal of this is to kind of show you a little bit more of a collective thought on how we think about the markets, how we strategize, and also edge, which is probably my favorite topic. Not a whole lot of people dive too deep into that in our space. So looking forward to kind of going through the foundations of that. We're going to try and keep this in a way that is applicable for everyone of all experience levels. I have a tendency to kind of dive a little deep, but we will try to keep it, good overview and good value for y'all. We also have cool, something really exciting to give to you all as a basis to kind of start your trading career in a more professional way or a more systematized way. So if you don't already have, clear systems for your, trading and you're just kind of learning, or even if you're experienced and haven't really gotten too disciplined with some of these things, in terms of, your systems, I have something for you that we'll talk about in about the middle of the session. So looking forward to that. So cool. If you're new, welcome. If you're a member, hope you're having a great day. Let's go ahead and get started. All right. So the agenda today, we really want to kind of touch on some of the pain points that a lot of people experience when trading of all experience levels. So we're going to talk first about knowing the difference between a great, good, and low quality trade. So how to size your trades and what makes up these trades. Spot your own setups without copying anyone else. So we'll talk a little bit about, the tendency that a lot of people have to follow ideas, and dive a little bit deeper into some of the things that come with that. Understand what edge actually means. Review your trades with purpose, and then we'll open it up at the end for questions and answers. And if you're just joining, there is a Q&A box you can type questions into as we go. It shows up in our queue, and then we'll get to it at the end. And I'll be kind of driving here, but Space Monkey and J Money both are here. J Money has some cool stuff to talk about at the toward the end here, and then Space Monkey will be hopping in with some of these topics as we go along. All right, so the first step is knowing the difference between good, great, low quality trades. How do you manage different trade grades? How do you even begin to think about grading your trades? And I think, this is over the past several years, something that has become, really apparent to me. It's really struck home with me, and also not just in my experience, but in the results. It's, when you spend over 10 years trading, there's certain things that you just start to understand and learn through the different cycles of market regimes and also just experiences as a trader. And so, before getting into how to grade a trade, I think it's really important to gain a foundational understanding of what you're working toward. What is the thing that you're going into every day and putting the hard work in? What is it for? And there's a quote by George Soros you've probably seen me talk a lot about recently. It says, "It's not whether you're right or wrong, but how much money you make when right and how much money you lose when you're wrong." So this is super important because, and if you study any major legendary trader, you'll find this theme consistent amongst all of them. The market's really unforgiving. So there's a fat tail risk of trading that not a lot of people address, and that is mistakes and the impact that mistakes can have on you. So a lot of people will kind of grow up in this human nature of, putting in hours, putting in time and getting money. And the markets, for people new to the markets, it's just doesn't work the same. It's not that way. Yes, there's money to be made on a regular basis, but most of the gains, over 90% of your gains, you'll start to learn come from 5% of days or even less. And learning how to push when the odds are in your favor is really what makes you as a trader. So this is really the cost of trading. The cost of showing up every day is learning how to do that. So all the work you're putting in, it's, a lot of people are like, oh, I want a daily profit goal, or I want to, this, that, or make money every single day. And you'll have great streaks. You will. You also have bad streaks. It is possible to make money regularly, especially in easier markets, but the cost is more so putting in the work to get to that confidence level where you can make the most of those 5% days. So you can make, there are most traders that I've studied, and including myself, you make the majority of your gains from a few opportunities. We even had a really good one recently from Space Monkey in that S&P trade that went over 4,000%, which is, absolutely insane. And those don't happen often. That's not an everyday occurrence. So the work that we put in daily, that experience you're building, is what builds up to understanding, what makes up those great trades and then being able to capitalize on them. So before getting into grading trades, I think that's very important. And to also, before we move on, to address the fat tail risk, what I mean by that, fat tail risk in trading is mistakes. The market is super unforgiving. It's just you and the buttons and money. If you make a mistake, if you have a bad day, if you're not thinking clearly, and you oversize and remove your stop, the market doesn't care about how that is going to impact you. If you make these mistakes, it can crush your profits. If you are consistent and disciplined for 90 out of 100 trades, 10 or even 5 or even 1 can wipe you out. So that is super important to know before you even get into your trading career. It's something that I wish I had a better understanding of before I got started. I had to learn the hard way through multiple blown accounts. So this graph just kind of shows you, illustrates that. So if you have X amount of drawdown, it shows you how much gain is required to make that loss up. And it just exponentially increases the more you draw back or pull back, the more pressure and difficulty it is to make that money back. All right. So bet sizing and profitability is another just kind of way to illustrate this point. So learning how to properly bet size is really important to kind of capitalize on that exponential return and being able to size up in those best trades. This is something that I would encourage everyone to take your time with. So I'll kind of just pull this up and categorize these by experience levels. Most traders, and there's not a right or wrong to this, most traders will start out with equal bet sizing. So something very, similar like 500, 500, maybe you increase to 1,000 on very special ops that you feel confident in. But for the most part, you have kind of a baseline bet model that you follow. This requires a exponentially higher win rate to do well, and also lower risk or tighter stops in general. But this type of bet sizing, usually the trader that is doing this will experience a lot of what feels like spinning your tires. Like you're taking 2 steps forward, 1 step back, 2 steps forward, and it's hard to really get anywhere. But it's okay to start there. I want to stress that if you're newer, using less risk and keeping risk very controlled while you're learning and gaining reps and building a playbook, which is something we'll cover here in a little bit, is perfectly okay while you build your confidence. Just understanding this concept, I think if I understood this before, it would have helped mentally to get through that phase, that journey, that part of the journey as a trader. Linear bet sizing is like intermediate. So you have a playbook, you're getting confident, and you're seeing certain setups. Okay, this is a little bit better than that. I've seen this before, that sort of environment. You can start to increase in a more linear progression. This is where a lot of traders kind of are at for a while. I think this is probably the longest phase of most traders' journey before exponential bet sizing. So again, before this, we talked about the cost of trading, the cost of showing up every day. You're putting in the work to get to this exponential bet sizing model. You don't start here. You don't even start at linear necessarily. So important to understand that and be patient with the process. The goal of this is to show you the fundamentals of how to build the skill required to get to this point. And then, so after you've gained some, experience and you're a little bit more confident, then you can start to, in your best setups where the data supports it, exponentially increase your bet sizing, and you can see the impact of the equity curve in doing so. Even if and there's more ways to illustrate this and go a little bit deeper, but for the sake of keeping it simple, you can break this down into the percentages we talked about. If only, 2 to 5% of your trades are this A size, and the rest are, bulk or B, and then a minority or C trades, it really dramatically impacts your P&L, and that's just really what trading is all about. All right, so before you can grade a trade, we talked about a couple things, understanding, the different bet sizing models, the process it takes, but before you even get to grading, there's another thing that's really important that a lot of traders miss out on, and that is grading or having a defined playbook. So what that means is essentially having a defined approach, making what you do on a daily basis defined and not random. You don't want to shoot from the hip. You're never like, if your goal is to truly make money, which is hopefully what everyone joining this is here for. If your goal is to really make a skill to be able to, change your life and make life-changing money, you have to treat it real. It has to be a defined business that you're managing and running, and that starts with a playbook. It doesn't have to be overwhelming. It doesn't have to be overly complex. It can start out very, very simple and basic, but starting and doing something is much better than nothing at all. Um, there's multiple reasons why, but this slide just kind of shows the evolution of a playbook trade. So this playbook trade or system starts with a concept. So you see something in the market, like, oh, I've seen this work, or I've seen this before. Someone is talking about this, and the market or the stock is reacting in such a way. That's a concept. That's an idea. Oh, I think this can happen consistently. And then that becomes a setup. So you have to then go into, what does a setup, mean? It means defined entry and exit, quite simply. And then from there, you get live reps. You start taking some reps with some smaller size. And once you have a little bit of a data set, you see, does this have positive expectancy or not? After five, it can be 5 trades, it can be 7 to 10 trades. It doesn't have to be that much at this stage to know if you're onto something, right? So if you have some positive expectancy, you're trading these setups uh, well, then you can then begin to size up. So once you have some data, you start to incrementally increase your size. And then ideally after, a bigger data set, like 30, 50 plus trades, if you're still having positive expectancy, you then want to get into grading the variables of each setup that shows up in more detail so that you can really size up and take advantage of those opportunities. So those unique setups that show up and you're like, oh wow, these variables are much better than what I normally see. You have to take advantage of that and really step on the gas, because it could save you or months of trading, or even make your year depending on how good the opportunity is. All right. So here's an example of a playbook trade and what that means. So this is a very common trade. I've traded this, have had this defined for a couple of years now. It's the opening drive trade. So opening drive is just one example of what does a actual like playbook trade mean. I think naming conventions are important. Giving these setups names, it doesn't really matter what you call them. People have different names for, the same setup. That's totally fine. The goal of naming it is so you can track it, right? So it starts with that. Opening drives is self-explanatory. You're basically looking to capitalize on the opening move. So these set up when you have a catalyst present. So when there's a stock with a catalyst, usually I look for a gap of 3% or more. You have some pre-market structure and elevated volume, and ideally an RSI divergence, which is just an added variable, which we'll actually talk a little bit more about at the end with J Money. And then you want to define entry and exit strategy. So this was ServiceNow recently. This put in a really impressive earnings report. You had a big gap up into a key level from the higher time frame right around this 900 spot. And then it just kind of flagged in the pre-market. It did have some bullish RSI divergence. And then right on the open, you got this little check back to that key level, and then a turn. And that aggressive turn is where you can enter the opening drive, risking that opening print or possibly like a little bit lower, and catch this momentum move higher. And then your exit, the ideal exit is a 5 bar trail. So you can use 2 or 5 bars, meaning the candle. So once this candle trails out from the prior, then you cut the position. So that's an example of a playbook trade. That's what the setup is, entry and exit strategy. And now I can take this trade over and over again and log it in a journal or database and then begin to understand, does this have positive expectancy, this idea? So that's a framework, an example of one playbook trade. All right, so a little bit more fun. How to grade a trade. I will say, this can be very nuanced for sure. So I would say give yourself grace with this at first. You don't rush into sizing up. There's no need to rush. I think we could all agree. I think Space Monkey would agree that um, you don't really have to think twice, really, when you're sizing up because the confidence is there from the experience. And if it's not there, it's probably not worth adding substantial risk. So to say that, but there are certain variables you can quantify before a certain type of trade. Some of these on the screen are ways that I quantify how to grade a trade. There are multiple different variables that you can look at. This is somewhat unique to me, but it could vary from trader to trader and playbook to playbook. Depending on the combination of variables, market environment, there's a couple different things that we look at. If there's a situation where the relative volume is trading like normally, so one being average on a normal earnings report, it's, say 3 to 5. If there's an earnings report that has 15 or 20 or 30 times the volume, then I'm going to give that a little bit more weight. If it also has good pre-market structure and also has an RSI divergence and the catalyst looked really good and beat expectations and the market happens to be aligned, all of these things, you're starting to check boxes and then say, okay, this warrants me adding some size. I can quantify these variables. It's repeatable. I can do it over and over again, and it deserves the risk. All right. So here's an example of what we just said. So UNH versus Tesla. So this is a recent example of grading a trade. So I was unfortunately traveling on this day on UNH. This was an incredible trade. We did catch the day two move, which was nice, but great example of a high quality uh, day one trade, opening drive, or not opening drive, sorry, frontside short on UNH. And on Tesla is just kind of average. And here were some of the variables for that. So with UNH, it's had a massive catalyst. So it had earnings, but also had more to that, which led to a much bigger move than implied. This gap down like 120 points. So it was down 21% on the initial headline. You had a gap down into this key level with multiple tests. This is from the higher time frame. So HTF, by the way, this just stands for higher time frame key level. Big catalyst. Pre-market structure was very nice. And on this first move up, we had this bearish RSI divergence present, which would give you confidence to short the opening break lower. And then you got this big intraday move. This is over 30 points intraday. Very clear, very easy, right? Like we talk about easy money trades. What's the easy money trade? You look at this and you get short. If you have a defined way to get short on a trade like this, on a setup with this impressive of variables, and it just does this, like how easy is that, right? Like it would be nice to be able to say, or to be aligned consistently with easy trades. I know trading can be very difficult, but there are trades that just feel easy and they do exactly what you would expect them to do. And that has a lot to do with the variables that are present in the stock. So this was a great example. It checked a lot of boxes. And then Tesla would be kind of the recent earnings is a good kind of difference or opposite. It had a fairly lackluster earnings. It was pretty poor. The stock still reacted positively. We had a big gap up in the market on news at the same time related to tariffs. The R-vol was only like one. It's like 1.2, which for Tesla is kind of crazy. It's very rare. Usually this makes some very big moves. It had some decent pre-market structure, and then at the open, sold off only to recover and chop around. It didn't really do a whole lot, and this was a weak catalyst. The higher time frame was stuck in a very choppy, area. The lower R-vol and the RSI had no divergence; it was just neutral, and didn't really create any strong risk reward. So, when you're looking at trading the open, would you rather trade or size up on variables like Tesla, or would you rather size up and give your risk the opportunity on something like UNH? And that sort of just kind of ties in the importance of some of the other points we were making before this.
Question, Mate.
Yeah.
With UNH, with the stock being down 21%, what is it that gives you confidence of shorting what some people might consider the whole, right? It's already down quite a lot. And even with that little bump near the open, like it still feels pretty extended. So can you
Mhm.
talk about that a little bit?
Yeah, it's a great question. And I think in my experience, this is usually it usually has more to go when the variables are very, very strong. So 21% is very significant. So there's two things with this. A, you don't ever know. I think that's just another foundational concept that we could talk about is as soon as you put on a trade, the next order could invalidate your thesis. So at the end of the day, anything can happen and there is no real certainty in trading, period. But I will say, like, when something's this sold off, and there's a lot more examples than UNH that we could, look um, at this stage when it's at a key level like this, you would be thinking, okay, it's found a base. And I would say that RSI divergence was a significant part of why this was so good. It basically, and J Money, I think in his section you'll be able to kind of see a little bit of this, but once it sold off this much, it reset on this bounce, and it actually got more overbought on this bounce than anywhere prior. So it is very overbought, but the stock is, over 100 points off of the highs and only, what is this, like 20 or so points off these lows. So I think with this in particular, it's, you don't necessarily need to know what the stock is going to do, but you want to ride with the momentum in cases like this when the variables are this strong. This was a kind of a nuke of a catalyst. So basically forcing out longs. There's a lot of things in my mind, but it's also a kind of a darling of 401ks. So this you can kind of even see it in the price action. It was very systematic. So at the end of the day, it's probabilities for sure, and there's no certainty. But when these amount of variables and the strong of variables are present, once you have a defined entry, you can really kind of catch the wave lower in that capitulation move. Um, I think with something like Tesla, it's a little bit more new. It's a little bit harder to have that level of confidence because you don't really have the extremes. Now, I will say, like, a lot of these setups can set up trades in both directions. But this one in particular is very, very, very heavy. So, from a probabilistic standpoint, especially if you see that this gets very bearish on this first move up, you have this opening candle and you break the opening candle low, you're basically saying, okay, at this point, your risk reward is very good and you're aligned with the energy in the stock. And unless that breaks, you want to be positioned with the trend and with the momentum, which is down on a name that has high variables. So it's more about what can happen on the rare
Yeah.
circumstances. And this is an extreme example too. I will say,
Yeah,
like,
yeah.
this is a very high degree. I put it in my top ops database for the
Yeah.
year. You don't see this a lot, not this good. So
Yeah, but I think the key in everything they said is that like you've done this so many times that you trust the system and you just trade the system. And you know, one or two sometimes do not work, maybe more, but across 100 trades, most of them will work. So it's worth trading them systematically like that,
yep,
which is important.
yep, cool. I think we just keep going, right? It's the next.
Yeah, sounds good.
Yeah, cool. All right. So next section is spotting your own setups without copying anyone else. So, one of the goals we mentioned is helping everyone build the skill needed to gain consistency and consistent profitability on your own. But there are some major things with this I think that are important to address. So trading communities um, can be a really, really good thing to leverage. So a lot of people in here are already members of the room. If you're not, I just want to kind of briefly touch on, there's a lot of communities out there, right? There's a lot of good information, there's a lot of bad. And there is a common, we've here at Trade with Insight have seen it time and time again. A lot of people will join for the wrong reasons. They'll join with the right intentions, but not know how to really utilize a trading community the best. And there's a kind of a right way, a right approach, and a wrong approach. And if you're just trying to directly copy, an idea or an alert, um, that can work for a time, but at the end of the day, the likelihood that you make mistakes or don't follow the plan, or even like if you can't conceptualize what the trader is seeing and how they're managing their risk, it's just kind of a losing game at the end of the day. Like you need to be able to understand what it is that's happening and be able to manage your risk. And ultimately, at the end of the day, size up. Because like we talked about before, creating those exponential wins is only possible if you have the confidence to do it, and to put on the size and take those shots. Um, so how to approach a trading community? I think there's a number of things that are super important, and I think applies to every level of trading. You will certainly go through different periods of growth where different things apply to you more so than other times. But even for me, like it's essential that I'm a part of our group. I happen to be, leading it a lot from the front, but it's still tremendously valuable for me as well. The number one thing is information edge. So regardless of what skill level you are, we're on stream live every day from 9 to pretty much all day with some breaks in between, calling out not only prepping in the pre-market and calling out the setups that we're watching and all the variables that we see, but if something happens in the market, we're calling it out, right? If Nvidia gets news like today, we're on it just like that. So having access to what's happening and very quickly and multiple eyes on the market is really important. And then you're also getting exposure into how experienced pros are managing their trading. So that's a massive advantage. You can have direct access to, not that we, know it all or don't make mistakes as well, but we have a ton of experience. We've been through so many phases of growth and in trading that you can shorten your learning curve by just asking us questions and digging deep and looking at the trades that we take. Like I said, we have a lot of amazing trades. We also make mistakes. So even in those mistakes, you can probe and ask questions. What were you thinking here? What was the reason for the exit? What was the reason for the entry? These are all great questions to ask. And I can tell you, the most successful people that I have met, which is literally thousands over the years of being a part of a community, the best traders are the ones that ask the most questions, like hands down, without a doubt. Um, one of the people that has asked the most questions today, I would say, uh, is underqualified, doesn't have a college degree, and got his way into a major prop firm on Wall Street that does not accept anyone without a college degree. And that's probably one of my proudest accomplishments with running and being a part of a community. But that person asked a ridiculous amount of questions and tried to reinvent everything that we were seeing and doing, and now in many ways does it even better, which is really cool to see. Um, Space Monkey, did you want to kind of share your perspective on the next 2 points of like diverse perspectives and speeding up the learning curve?
Yeah, I mean, I think it's important to be open-minded, right? Like often as traders, we have a way of looking at things, and sometimes it creates a bias. But being a part of a group of traders that have different biases, different perspectives, I think helps. And if you're open to it, it could make you less biased when you get into a day. So that's what I would say about diverse perspectives. And also would allow you to have a broader coverage when it comes to individual names. So as one person, it's just that many names that you can keep track of during the day. But having a group of people that are trading at the same time, and everybody's kind of collaborating, could help you throughout the day. So if somebody's calling out, Reddit is moving higher, you can quickly kind of take a look at it and kind of become more aware of what's going on. So that's diverse perspectives. Speed up learning. I mean, it- we've spent many years trading, and we've spent many years building up our system or our playbook. And so having access to that is a shortcut, is a cheat code. And so I think that's probably one of the most valuable things when it comes to, being a part of the trading community, especially one that is focused on trading in a way that is, not kind of random, right? We follow a certain system, we follow it. We have entries, we have exits, we do things in a way that is, easy to learn and easy to kind of predict in a certain way. So that's that. And also, when you first start, or if you've traded a few years, you're still kind of trying to learn about how to do this professionally, right? In a way that is, not random, right? Being professional is a lot of things, but being able to have a plan, follow the plan, um, you know, knowing when you're wrong is important. So that is also another point that is super important when it comes to like speeding up learning. And I think structured approach to trading is just having a system to follow. Um, so that's kind of all I have there. But I think this community does follow these principles, and it's important just to, if you're part of this community or not, it's important to do this in order to have some sort of longevity in this game.
Yeah, 100%. And I would just add, in like the example of information, as you mentioned, hey, Reddit is doing X, Y, and Z. A lot of times there can be, for newer traders mostly, this kind of tendency to want to say, oh, this experienced trader is watching Reddit. I need to do something. I would encourage you to use the information as edge, meaning take that and say, ask yourself, okay, how does this align with my playbook? Does this make sense to me? Because ultimately, your confidence, you'll only have confidence if it's originating, if your entry and exit are originating from something that makes sense to your playbook. It is totally fine if your playbook overlaps and you would take the exact same trade. That's great. You're capitalizing on more eyes on the market. But, I would caution you and everyone listening to, just because someone's calling something out or saying something doesn't mean you have to go jump and put risk in. So something I wanted to mention, but yeah, great
Yeah.
points.
No, it makes sense. And it's you can use what people are calling out as a filter, right, of sorts, right? Like if you have a filter that you kind of look at every morning, like not all names fit your trading style or what you like to trade or whatever it is. Right. So, having people shout at things and, it's just a way to get that initial information. Then it's up to you to decipher it and see what works for you.
Yeah, cool. So on that note of confidence, on our next part of this, it is a key to sizing up. So it's all the things that we've talked about is basically how are reverse engineering success. So, take the time to study what works, understand why, apply with, I like to call it concept size or small size. It's that first step in the evolution of building a playbook, right? You have an idea, understand the entry and exit, start small, build your confidence through the results. If you start right, if you build a good foundation, it'll be easier to size up, but you'll also actually get to that goal of sizing up faster by doing it right to start. If our goal here is to try and save you from making the same mistakes that we've made. So if you start understanding what a playbook is and building a playbook, have defined entries and exits, you're going to save so much time getting to that exponential bet sizings. This is a cool graph to kind of show, that evolution, right? As you're studying, as you're applying, building confidence and scaling, your confidence is just going to continue to build and build and build. And that's just with experience. So a couple different points here, on how you can approach things. Study experienced traders. So I post reviews every day. So I'm currently doing another small account challenge where every trade. I post the thought process, the review, what playbook trade it is, if I made any mistakes, completely transparent with that and the results. And you can, these are great opportunities to ask questions, what's working, what's not working, these types of things. So understand the nuances, understand the variables present, and don't be afraid to ask questions. The other thing that this is one of my favorite and honestly one of the most impactful exercises that you can do every single day, and that this is every trader of every level, is ask yourself what worked today. What was the easy money trade? This is a process that for the last couple of years I've asked myself daily, and it accomplishes a couple of things. It allows you to begin to build pattern recognition. So you start to see things over and over and over again. It becomes easier to spot them in real time, and then also gives you confidence to execute on them. But then it also will help you stay dialed in to what's working in the market. So, and also possibly expand your playbook. So if you're asking yourself what worked today and something moved really well that's you don't really have a playbook for, you can apply that process, that evolution of a playbook process to that idea because that's a concept, right? It's like, oh, this moved a lot today. I don't really understand what the setup was, but let me look at it. Let me spend time looking at it. You don't have to have traded it, but what worked really well. Some days there's not a whole lot, but there are most days something to kind of learn from and something that was easy. And it's okay if it's in hindsight. Once you build this over time, like I have this top ops database or a playbook trade database that I have been tracking for a long time. And you can just come in here and just say, okay, that's a catalyst breakdown. Here's a failed breakout. Okay, what does it look like? You're by doing this and taking the time to ask yourself this question every day and log it, you're building this pattern recognition where you continue to see, okay, this is what that was. This worked well today. Um, and it really can speed up your ability to spot trades in real time. I just thought I'd close the thing. Cool. Was there another point on that, Space Monkey, that you wanted to make?
Yeah, I mean, we talked about when we did like this dry run, you and I, we talked about how you can liken this to like if you were a kid into sports, like I was, like you always looked up to your idols and you try to emulate them in the way they played on the pitch or on the court. You try to throw like them or kick like them. And it's what it is, right? Studying experienced traders is like studying pros in sports. So that's all we talked about. And I think it's important because it's not about being the first, it's being, becoming better, and it's okay to look at others and become better through them. So that's all that is.
Yeah. I would say to add, success leaves clues. It's a quote that I
Right.
think it's from
Right.
Kobe.
Yeah, 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 yeah.
It's a good
That's
one.
appropriate. Yeah.
It's also good to consider what didn't work as well, too, in
Yeah, I
addition
think
to,
that's important, Mate. Yeah, it's like it's easy to look at what worked, but it's really hard to look at what didn't. And often you
yeah,
have your biggest lessons in what didn't work. So being able to being open to that and being like honest about what didn't work, as frustrating as that is, and I still struggle with it. It's important to look at what didn't work because, within those situations, those patterns, there are a lot of lessons to be made.
yep, 100%. All right. Next section's my favorite conversation. So, understanding what edge actually means. There's a lot here. I'll keep it fairly simple, but at the end of the day, if you don't have edge, you're going to lose to the house. That's just something I wish I would have understood much sooner in my career. I think in easier markets, it's easy to do okay and do well, even. But if you don't really have edge, nothing else really matters. But at the same time, I like to kind of illustrate that edge is like the legs of a table, right? And without the legs, the table can't stand. But you can't use the table. The psychology and risk management are like the tabletop. You can't really use the table unless you have good psychology and risk management. So all these components are very important. Your edge, without it, you can't really win in the long run. You might have some good days, you might have some good streaks, but eventually the house will get you. But if you can't think properly to execute your edge, if you can't honor your plan, if you don't, take your targets or cut your losses, your edge is kind of in many ways meaningless. And then the same token, risk management is the same way. So you can have great edge, but if you have no management at all, that fat tail risk in trading will come up and kind of bite you. So all these things are very important, and successful trading requires all of them working together. So some of the foundation of edge is starts with understanding that the markets are designed to be efficient. So understand when you show up every day what you're competing against. If you're, trading stocks that are, not moving like very well, again, the market's job is to be very efficient and price in information. It does an extremely good job of that, and it continues to do better and better as technology improves. So understand that that's something you're competing with, and going in, there's a aligning with some efficiency in the market, but then also inefficiencies. And you're every day competing with institutions, HFTs, algos, big players, essentially the house, right? Like this is who you're showing up to the table to with every day. And most stocks are going to trade within these ranges that are very consistent. We'll talk about this, but ATR is the average true range of a stock, right? It's what a stock will typically trade in, the range it will trade in. And so there are times where, news or something is driving the market that creates these imbalances or a need for the market to price in something new fast, and you can align with these efficiencies or inefficiencies. Um, and this is a nice visual, just kind of reiterating, the reality of market opportunities. 50% of the time there's something there. There's a trade that you take if you have a linear bet system. You'll do pretty well, and you manage to be profitable. But what really matters at the end of the day, to avoid that fat tail risk in trading where you might have a bad day or make a couple mistakes, feel like it's two steps forward, three back, you get rid of that by capitalizing on these great days. And there really is a smaller percentage of great days, even smaller percentage of incredible days. And then there are one or two trades, usually a year, maybe three tops, that are just insane. They're the best. They're top opportunities. People talk about them for forever, right? ARM spring of last year when AI was a huge narrative in the market. ARM had an incredible day one, day two combo. That was just that nuance of the AI was super compelling. MSTR back in the fall, when it was squeezing, there was a lot to that trade. I have a full review on that, by the way, full video breakdown, that was just an incredible opportunity. You just don't see that all the time. You'll see a couple themes, a couple things, a couple times a year that are just incredible. And the more you understand what those are, the closer you'll be to sizing up on them and really making a difference in your career. And then the rest are just kind of untradeable. It's just you have to try to survive through them and keep your mind focused. So I kind of hinted at this, but there's two different types of edges. People, use this word loosely a lot, but there is edge in having a defined system, good psychology, risk management, and aligning with good stocks. So if you can improve your stock selection simply, that is along with those other variables, that is an efficiency edge. So you're basically aligning your setups and playbooks with, what is trading the most volume and what is moving really nicely. You're aligned with it, and there is edge in that. That's the most common. That's the easiest to get into. There are other areas of edge in the market that are much more advanced that we won't get into here. But they're, rare. They typically don't last long. There's like arbitrage opportunities, order kind of limits and different things that can create unusual edge that isn't really worth diving too much into here, but that is also an edge where something is kind of broken in the market until the market resolves it. it is a unusual edge. It's kind of like a broken slot machine.
Hey,
So as far
Matei,
as
just
yeah,
just a note on the previous slide.
yeah,
A lot of newer traders um, uh, force trades, and what I mean with that is that they keep looking at the stocks or the names that for some reason they have some sort of emotional connection to. They keep looking at them, they keep trading them when there's really nothing there, and there are a lot better opportunities elsewhere. Right? So the Nvidias, the Teslas, and all those. Like at some point, you have to improve your stock selection. I like that you added that there in the slide. Like if you could improve your stock selection, meaning you could ignore what's just not worth your attention and just focus on the stocks that are. I think a lot of traders out there will do a lot better. And so just that's I think a pretty like a cheat code almost, right? If you're able to just ignore what's not working or what's not moving and just focus on what it is, irrelevant of what it is, like what it does, what the fundamentals are, just the technicals, because we're technical traders, that will, up your game tremendously. So I just want to make that point there.
yeah, great point. And kind of on that note, it leads us into, like how do you gain that
Hmm.
statistical edge? So like on the back of what Space Monkey was saying, the way so that's what Space Monkey just said is super important. And then a lot what at least when I look back and like when I was learning, trading for the first time and stuff, there was always this kind of lingering question on how. Like I would hear things being told or talked about, but there was a little of the how part. And so, how do you actually quantify what we're saying? And you can do this very easily and immediately tomorrow. The way you can quantify this, and it's the fastest way to literally immediately improve your stock selection, is with RBAL and ATR. So, these two things that you can add if you use TradingView, it's very easy to add to your charts. It can increase your stock selection so much right away. So what is relative volume? It's just what the relative volume of the stock over the last 21 trading days. So you're just taking the average of how much volume the stock trades, and it creates a number. One is average, below one is below average, and above one is above average. And it doesn't need to be something that you're, it's super scientific with. I use it as like a gauge. It's like a barometer of sorts where you're just gauging how much participation is there. The more market participation, the more likely the stock is going to move outside that range. So ATR is the average true range. It's how much that stock typically will move on the average of 14 days. So, a stock might typically trade in a 5 point range. But if it has an R-vol of two or three times because of whatever reason, catalyst, market dynamics, whatever, the likelihood that it's going to move more is significantly higher the more the market participation there is. Pretty easy concept to understand. But a lot of traders miss this. Like Space Monkey was saying, a lot of people get, and I was the same way. There was a period where I literally only traded Amazon, which sounds kind of hilarious, but you go back and look at Amazon, let's look at the weekly chart. It was somewhere back in here. Let's see, this is 2018, 20, like back in here, it's like you could almost trade Amazon exclusively, right? But that was a very different market regime. Things were
Yeah,
doing things a lot
that
different,
was
right?
before they split and before it sucked. So,
Yeah, exactly.
yeah,
That was when it
to be
was like
honest.
$2,000. Yeah.
Yeah.
Um, So, if you're focused on, but while it is good, I will say, because a lot of traders start to get a little experience in the wick, there is certain behavior of certain stocks, and there is an
Yeah.
advantage to knowing how certain stocks trade. That
Hmm.
is true, but I think that can be true at the same time as what we're talking about now, where, if Nvidia is stuck in a range, you don't want to trade that every day. You're competing. Think about who
Right.
you're competing with. You're fighting the house, right? On any given day, like you look at just Microsoft's, 15-minute chart before earnings. On any given day, you're just fighting these small ranges with an exception of a couple days that are good. And, like a day like this, the stock is in a very small range, 6 point range, and
Yeah.
just really not doing a lot. So why would you want to trade Microsoft, and I bet you that RVOL is low. So RVOL on this is 0.53. So it's trading 50, basically 50% below its typical volume.
Hmm.
And, so like this day, Microsoft might not be a good example because it just now is getting volume, but like let's look at UNH since we were on that earlier. So like UNH, the chart's like crazy because of the earnings.
There you go.
These days are, not the greatest. There's a lot of catalysts on this, but so like this day here in particular, right? Like we're trading, 0.22, point 0.4 RVOL, and the stocks just, didn't just, like, it even almost looks thin. It's like not even doing anything, right?
Yeah.
But then you get a catalyst and it makes, a 30-point move. So the stock's ATR normally, I think it's about 10, 15 points. What is it? It's 20 now, but that's going to be averaging in um, this most recent earnings move. But it's give or take 10 or 15 points. And this is moving over double that in a day after it moved 120 points down on a catalyst. So,
Yeah.
this is an extreme example, but it's trading in the pre-market 158 times the normal volume. And then during the session, once things kind of, level out, it's trading 18, 16 times the normal volume. So if the stock's ATR, if it normally moves about 10 points, but the volume is 16 times, don't you think that the odds that it can move outside its range are a little bit more probable, right? It's a higher probability.
Yeah.
And so this relationship between the relative volume and the average true range is this very, very simple way to quantify how you can improve your stock selection as soon as tomorrow.
Mate, good points. Can you share which RVOL indicator you use on TradingView? One of
Yeah,
the viewers are asking about that.
yeah, good point. So
The
if
settings.
you on TradingView, if you go to indicators, you just type in relative volume. It'll be this one that comes up that says relative volume at time. So once you have that, you have to open up the pane, and then you'll want to click the settings, go to inputs, and change the length to 21 days. So there's on average 21, 22 days in a trading days in a month.
Awesome.
Um, and then while we're on it for ATR, we like to use Satty's ATR levels. So just type in SATY, it'll pop up ATR levels, and that's all you have to do. You can,
Awesome.
it'll pop up in the top right. It'll tell you up here, you can see 20. That's the value of the ATR. And then there's some more with that, but we won't get too into it.
Yeah. Awesome.
Good note. Cool, cool. All right. So, we've talked a little bit about this, but this is kind of in practice. You can start to visualize some of what we're saying. So, again, just reiterating, all the work you put in daily is to get to this end goal of being able to size up in your best trades. It's where you can make your career. It's where you hear about these experienced traders making all this money and making it look easy. It's not random, most I would say most of the time. So the most successful and consistent traders are able to accomplish this because they're able to nail the big setups with a lot of size. And so, this one of the traps with linear growth or even equal bet sizing is that fat tail risk of trading, where you kind of get caught in this mode where you want to show up every day and make money. And it's not to say that you can't. You will be able to do this. There are good streaks, there are bad streaks. I've experienced a lot of this. But at a certain point, for most traders, you'll experience these tougher markets, or maybe you're just mentally not thinking as good one day or don't get good sleep, and you make one mistake that just wipes, 50% of your progress away. We've all been there countless times. Most traders can relate to that. And that's the problem with some of these concepts that a lot of people talk about, of setting a daily, profit goal, or using the same position, or, not accounting for mistakes and being human. We're all, at the end of the day, we're human. Where no one is, immune to making a mistake. it's not about avoiding mistakes. It's about building systems that control the drawdown when you are making mistakes, or maybe you're just not seeing the market clearly. Maybe the market or your playbook's just not performing well. It could be any of these reasons, but having a linear bet size or equal bet size model does not factor in most of the time those challenges. And so it's not to say you can't do okay or well even with that model. It's just if you're not prepared and very disciplined, it can be a trap. It can be very difficult. Whereas sizing up or this exponential growth is going to save you that time. It creates this buffer where you're not as subject to these drawdowns. Now, it can work in both ways. Traders can go on tilt, even if they're up a lot. I've seen traders have seven figures go from being up seven figures to down in the hole hundreds of thousands of dollars. That is just as real as anything else. So at the end of the day, you have to put systems in place at every level of trading. But if you do have those systems in place and you are sizing up the confidence on these opportunities that present themselves and putting in all this work to get to this point, you can achieve your goals. So this, just a little screenshot of what this can look like. And if you were to imagine another line, a red line of mistakes that come in and kind of wipe out some of these gains, this linear curve, or not curve, but linear line is usually what you see from growth, and it doesn't get you very far ahead. Like I said, you'll have some good streaks and some choppy times, but if you make a couple mistakes, you're closer to this break even line very quickly. Whereas if you're able to catch these bigger gains and exponential growth, the pullbacks don't affect you as much, just mathematically. And then from the past small account challenge I did with building a new playbook that I hadn't traded before, I was risking about $500 to $1,000 per trade, and was able to achieve this exactly what I'm talking to you and kind of prove this to myself with a new playbook, which involves about 5 to 7 different types of setups. So very linear, some pullbacks, some choppiness. But then I introduced around the end of this challenge here, I introduced some exponential bet sizing. And then this is when I just started sizing up big on some of the best opportunities I saw. And it works. It works not just in theory, but in practice as well. So I wanted to show you that.
What are some of the things that you look at, Matei, uh, for assessing what should be, bet on a little bit larger than others? Like, is it the stats that you mentioned earlier, right? Or is it something else?
Yeah, I think
Like,
it's a combo of two things, variables and confidence.
hmm.
I would caution, like, there's a trader in the room I've been working closely with for 4 years, 3.5 years, and they work full time and everything too, so they're only able to put in so much time into the markets. But they're at that linear phase, and they're not quite ready to size it. They're very close to sizing up, but the confidence isn't quite there. And so the reason I want to make that point first is it's not something you want to rush. There's not a need to rush it because when you start to get to the point where you can accomplish it, like the opportunity to make a lot of money in the market is always there. And you can make a ton of ground in your account in a short period of time. Um, that being said, so the confidence is a huge component of that, and you're only ever going to get that confidence if you get the reps, right? If you have the experience and you've seen something before.
Yeah,
Um, Now, with knowing when, like more to your question specifically, I do think it comes down to those variables.
yeah,
And it doesn't mean that, I don't want to confuse that with certainty. You're not necessarily looking for certainty. You're just looking for the same thing that you've seen, but with way better variables. Maybe it's if it's a technical breakout, right? And it, has multiple tests. One technical breakout has, two tests at all-time
yeah,
highs and versus one that has 4 or 5. And that one has the market breaking out of a key level and the
yeah,
VIX, below 20 or something, right? It's like there then you recognize and you're like, okay, this is really good and it's a little bit more asymmetric. You can hit that with more confidence, more size, right? So I think it, at least for me, comes down to those variables. I don't know if you share a
yeah,
little bit different perspective, but I've just noticed that, and I think this is also like I would say the opening drive is a good example of this. So over the last year and a half, I was grading every catalyst. So I don't do it as directly as far as a grade. I just look at them and kind of know now. But I challenged myself to grade every earnings report. So every catalyst that came out, I looked at the numbers, the EPS, the revenue, all of that, and the guidance, and I would give it a grade. And then we even created like a ChatGPT prompt to like ask it to grade it and stuff. And I
Hmm.
just started to train myself to read these headlines and then, but also combine that with how the stock was reacting and just literally doing that every time, every quarter, for the last over a year, giving it a
Yeah.
grade and then seeing how the performance is. And then that just built that muscle memory, right? Where it's like, oh,
Yeah.
UNH, that is different. Like that is way, way, way different. Hey, we got to focus on this. This is top up. This is top up. Like it sends off the alarms, right? The variables are unusually strong. The setup is still an opening drive or a frontside short in UNH's case, right? Like the setup is still the setup. Nothing changes with that. It's just the variables are so much better that it's like I have
Yeah.
to be putting more size to it, if that makes sense.
Yeah, I'd echo part of that. And just quickly here, I think for me, it also depends on the environment which you're trading. So over the last few months, it's been really tricky trading. I think we've done a really good job of managing, but when the market is moving, when we're in an environment where the market is moving higher, every dip is getting bought, there's not a whole lot of headline risk out there. It's just easier to kind of step on the gas a bit and increase your size. But when the market is doing what it's been doing here over the last few months, it's just so much harder, right? To be even with the variables, it's just harder to step on the gas and be super confident that UNH trade was excellent, and we've had a few other ones that have been excellent. But I think overall market alignment is important for me to be able to be confident enough to like scale up. Otherwise, I'll just size down to protect, the account and the gains that I have.
Yeah, that's a
Yeah.
fantastic point. I think the fact that, we don't like to be quick, not to get into it too much, but I can probably think on one hand the opportunities this year that were worth sizing up on.
Right.
Which is it just says a lot, right? There's been moments, there's certainly been good opportunities, but it's not like other markets where it's like, I remember a year ago filling out the top ops database and the playbook database, and there were days where it was like five or six
Overwhelming,
playbook
probably.
trades,
Yeah.
and I'm like, holy cow, like just put risk on all of these, like you need to be
Right.
hitting everything, and it's a great point because the market regime is different, and it can change. So on that note, we'll go into our last section for me. Um, this is a big one. So journaling your trades, there's a lot of power in this, and we've talked a lot about systems. We've talked a lot about the importance of reviewing your trades, grading your trades, learning how to do that, building the foundation for how to do that, quantifying it. Um, but more specifically, when reviewing trades, a couple points, and then something that we're actually going to give everybody that's attending the workshop here. So a couple of notes first is, when you're documenting a trade, just a couple of quick things. You want to take note of the variables, list out the variables. Even if you don't have to get it perfect or get it right, but grade them, list them out. What can you quantify about the setup that was present? Define your entries and exits. Did you follow your plan or not? Make note of any mistakes and your emotional state during the trade. You can use a trade journal, a database for this. Excel works fine if you don't want to pay for a pay journal. And it's also just psychologically important to understand too that a losing trade can be considered a win if you followed your plan and gained something from it. And conversely, a winning trade can be considered a loss if you broke your rules and reinforced bad habits because and that one is a little bit more sticky and easier to understand because, like I said before, it doesn't require skill to make money. It requires skill to keep it and to know how to size up on opportunities. Anyone can go in and press, you could blindfold someone and tell them to click until they hit the buy order, and that could end up working, right? So it is possible to put on a winning trade that's not really a great trade. And it's also possible that you put on a trade but broke your rules and then reinforced a mistake or a bad habit that you have. If you're doing that, it's not so much that about that winning trade. It's about what does that habit lead to? It leads to that fat tail risk in trading that I was talking about, throughout this presentation, where a couple mistakes come back and just ruin your progress. So tracking whether or not you followed your plan, super, super important. So this is the next thing we are giving. This is something we're giving everyone. This I can't express enough, how much value is in this. I'm giving away the trade journal template that I built through my process of building my expanded playbook through 2022 into it's evolved into now. So this template you can duplicate and create your own, so you can make it personal to you. I wanted to give everyone a quantifiable way to start journaling, start treating your trading like a business, and to have a framework to go off of, save a bunch of time organizing, and also how a pro would be thinking about trading. So I have some stuff in here. If you duplicate it, you can delete it, make it your own. Everything in orange is just some from my playbook, some thoughts that I have, some beliefs and systems that I follow. There's a template. You can kind of go in to each resource and dive into the journal side of things, where there's a report card, daily report card. If you want a template to kind of follow, how to review your trade, like what to list out, what was the easy money or top ops and layups, all that is in here. We also have, a recommended way of, tracking performance by quarter. And here there's different reports you can generate. I even have some examples of the playbook. So our playbook is in here with some examples of these setups that we're talking about. So a little bit more detailed. And of course, if you guys have questions, just let us know. You can delete, make this your own. You can, piggyback off of some of it. And then the last thing is a top ops DB, which is something I've come to like a lot. It's a great way to basically build. It's harder to build pattern recognition on top ops because they're more rare. It takes longer because they don't happen that often. You can go back in history and study them, and that's a great way to speed up your ability to see one in real time and then be have the confidence to hit that trade. But this is I like to have the calendar view as a way to, list out a top op when it happens. So some of my old ones are in here. This is something that in the small count challenge I'm running, there's a notion that members have access to that can see live, real ones that are, happening in real time, I should say. Not they're all real, but in real time. And then, within, there's also a different view in here. You can look at the list view, table view, whatever. These pop out and open up into more detail, which some have more detail than others. The ARM trade from February. This was one I mentioned earlier. This is in my best all-time day two setup. So, anyways, it's just a great. It's that same pattern recognition exercise. So this template is going to be completely free and given away to everyone that's attended the webinar or the workshop today.
Cool. And quick note, if you want to duplicate that when you get the link, there's a little thing in the top right-hand corner that says duplicate.
Yeah, great note. Yep. And if you don't have a Notion account, you can create a free one, by the way. So in order to duplicate this, you will have to have a Notion account. All right. So once you're journaling your trades, once you're building data, you're doing all the things, right? This is what I mean, it depends, I guess, if how nerdy you are, but this is the fun part to me. I think when you have good data, it is so much easier to make decisions versus just, oh, I think this could work, or I don't think this is working. It's no, you can literally look at the data and say, okay, this setup sucks right now, or this setup is working well. I need to size up on it the next time I see it. Good data is critical to getting to that goal of sizing up. So what's cool is once you journal or start tracking your trades, you're going to be able to start generating reports. And in those reports, you'll be able to identify different patterns of wins and losses, where you're strong, where you're weak, and make data-driven decisions. So there's a concept that we're going to talk about with PDR. Pretty straightforward. It's just a you know a term I coined, which is positive decision rate, which is basically this is to illustrate the importance of tracking, following your plan, or just being aware of following your plan at the very least. Mistakes compound and they can really drag on your account. And by following your rules and being able to visualize how you do when you're following your rules versus your mistakes is super important. And this is just a way to kind of illustrate what that typically looks like. So, losses are typically greater when you break your rules. And this, if you're seeing it and visualizing it, it will really help you stay disciplined and avoid the same mistakes. So this positive decision rate is just simply a way to reinforce that habit. So this is something I did for a few months, a little over a year ago. It's just like a mental exercise. You don't necessarily have to track it. I liked to just to kind of see how my performance was relative to my decision-making process. I think I made like 270 decisions and had an 87% positive decision rate. This is like totally a nerd thing to do, but um, it was really good in shaping my mind to really always know the importance of following your plan. It's not just to sound, good or have good discipline. The bigger point, I think, here, when you start to build data and you've had this foundation started, is understanding how those mistakes impact you, like in this graph. What's really important is these mistakes increase your variability in your data, meaning you have to have, in order to make data driven decision, if you're an analyst of your trading business and you're objectively looking at, okay, this is an opening drive, this is my entry, this is my exit, here is my performance. It's either your playbook or your setup either has positive expectancy or it doesn't. This is where you can start to remove the personal part of trading. You can remove your emotional decisions, your emotional impact by being objective. It's, hey, this opening drive business either makes money or it doesn't make money, and that can vary in different market regimes. Right now, opening drives aren't really doing the best. There's a few that are working well, but earnings have actually not been the greatest for opening drives. It's not been as good. So, but if you have the data, you can objectively make this decision. And the reason why following your plan is so important is not just to build that confidence and discipline. It's because it creates bad data if you're making mistakes. So if you are tracking opening drives, for example, and you don't follow your plan on a trade, well, now you just log data that the P&L is not going to be connected to the true performance of a trade or a playbook trade setup that you're tracking, right? So the more you can remove yourself from the equation, the better the better data you'll have and the more data-driven decisions you can make. Now, I will say, like, don't expect perfection. There is discretion in trading and everything that we do. This is a framework to help improve. So everything is about efficiency. And, I think this is my last thing. So I'll leave you all with just kind of a quote that resonates a lot with me on this topic. And that is, great is the enemy of good enough, right? So there's, for the perfectionists out there and the people that are, really driven to do well, perfection can be an Achilles heel. So being great can be your worst enemy, or being the enemy of good enough, right? So you want to give yourself grace if you're not doing well, and be hard on yourself when you are doing well, and asking yourself, how can you make more, right? If a certain setup is very profitable, hey, how can I size up double on that? Like, that's a worthy question to ask if the edge is there, right? And if you're not doing so well or setup stops working, dial it back, reduce your size, wait, and find something that is working. So I'll leave it with there. And the next section, we have our very own J Money to talk about failed breakdown.
All right. Yes. Great work, Mate. Can you click that and make that larger? I'm just checking.
Yeah.
Okay. So
Yeah.
that's fine. I'll probably come back to that.
Yeah. Just
Uh,
let me know where you want me to do.
okay. Yeah. We can take it down for a minute. The failed breakdown is a trade setup that I think has been really helpful for me. I think if you if you focus on it and really study it and practice it, then it can be extremely powerful. And I think the main thing about the failed breakdown was just changing your mindset. That the market is going to do the thing that traps the largest amount of people, the majority of the time. And so, just changing your mindset to thinking about being aware of potential traps has helped me in a lot of ways, not just trading the failed breakdown, but just looking at where is the spot that shorts are likely to be caught off sides, and one, not being caught with them, and two, when they are caught off sides, using that to our advantage, and being long when shorts are being forced to cover, and you have that added momentum to a long trade is very helpful. So just quickly, the failed breakdown, the couple key pieces to that. Number one, you have to have a low, and it's not just any low on the 5 minute chart, but ideally a prior day low that where there's an extremely strong bounce. Primarily look at this on ES. So something like 20, 30, 40 point bounces. So you can see on this picture, when you're zooming out and looking at this, that's a very obvious spot where, very strong bounce. There's obviously, buyers that are, there's a lot of demand at that spot. So you have a low. I always mark that on my chart, and I'm always aware of that the next day. So usually the prior day low, sometimes an overnight low. Any kind of strong bounce that looks like that, I'm going to be monitoring that later on. If price tests underneath that and is not able to continue, I'm immediately starting to look for a failed breakdown. And so a lot of times, especially early on, you see a low like that, and traders, as soon as price goes below that, traders want to go short because it just looks so defined and it looks so easy. And that's the problem with this, is that too many people try to go short. So you have a low, you trap below there, and aren't able to see continuation. You want to be going long when those shorts are forced to cover. So for the actual entry of this, the main thing with these trades, you can't just go long as soon as price wicks back above the low. What you have to think about, what's the mechanics of this trade is there are shorts that went short underneath that low, and price has to do something to make them cover, and we need to see evidence of that covering. So typically, some sort of back test, and holding above the low for more than just a few seconds, ideally, 10 minutes. But you have a low, you trap below it, you don't see continuation lower. Like if that area failed, you should pretty much see a sell-off pretty quickly, and it shouldn't really hesitate, and it should start trending lower. And if you don't see that, watch for the failed breakdown. Price holds back above the low for 10 minutes and starts to push away and move higher with some momentum, then get long with them, and try to take advantage of that short covering. So, start looking for these. One, flip your thinking to not try to short underneath every bounce like that. And two, when you try to identify when the failed breakdown is occurring and go long, because typically these lead to large momentum moves, and a lot of times they set the low for the day, and you'll end up getting long near the low of day, and then you can just ride runners up to high of day. So that's a visualization of that, and I
Hey,
think the
JM,
mindset. Yep.
can you just one of the questions is asking you to highlight with the mouse to describe what you're talking about. So I think yeah, the recovery there.
Oh yeah, right here.
Uh,
This entry.
Yeah.
yeah. So you can highlight, and actually, um, you can use either example there, Matei. They can't actually see
Oh
my
yeah.
mouse.
Okay.
So
I can do
you
it.
can see the prior day, the big bounce, where I have the caption that set the low. So that's the low, and then I would mark that on the chart. And so the next
Hmm.
day, if you see price flush that and isn't able to see a big sell off and just kind of holds underneath the low, That's where I'm thinking, okay, if this was going to fail, it's going to sell. Instead, it's just holding right underneath the low and immediately kind of pushing back above quickly. That's not what you want to see if a support is failing. If you're
Mhm.
trying to be short, that's not what you want to see. So then the entry
Right.
there, you can see those are 5-minute candles, and price pushes back above the low, holds for 10 minutes, and then starts to push away. So the entire process could take 30, 45 plus minutes. Um, and so, it's very much like watching price action and seeing, does this see continuation down, or is there obvious evidence from the price action that not only is price not selling off, it's holding back above the low, and now it's trying to reverse, and that's where you want to make your entry.
Yeah.
Um,
And J Money, I would also add, like, if you are looking to go short, like ideally you see weak bounces, right? Or multiple attempts. Like, do you place a value on the number of times that, like, once the set low has been tested? Like, because this is only the second, technically the second test or the first retest of this low that was set. So like
exactly.
the fact that there was just not a lot of, pressure, or the bounces weren't sustained,
Yeah,
only kind of improves those variables for you.
yeah, that's the other thing, is that that low was set the prior day, and so this is basically the first test underneath that low since that bounce. So personally, and
Mhm.
something that we usually pay attention to, we're not trying to go short on the first time price tests underneath the low. Like you said, if this had been tested over and over again over the last several days, and had those weak bounces, then we're starting to think about looking short. So, just try to kind of be aware of this, and not trying to go short the very first time that price tests below a support,
Mhm.
especially a low like that.
Yep.
What are your stops on those entries going
So,
long?
whenever you have the test below the low that doesn't continue, and you're looking to enter the failed breakdown, your stop for the failed breakdown has to go underneath the structure of the current low.
Hmm.
And so that's where you want to place your stop. Everything above there is okay, even if it sometimes can get a little bit messy, but your stop needs to be underneath that structure, and the trade is still okay as long as price is above that. When that fails, that's when you typically get your true breakdown and your true
Right.
short. So it has to go underneath there, and you have to give it some room, and don't be it's okay if it moves around above that low a little bit.
Yep. Awesome.
And
Great.
as we're
Like,
speaking,
is
we're trying
S&P
to get
putting in a failed
we're trying to
breakdown?
get a failed breakdown on ES right
We have
now. So
a live failed breakdown on
be
the workshop.
slightly gonna be slightly distracted. Um, so
J-
today's low 56.27. Uh,
There's a headline out. China says currently evaluating possible U.S. trade talks. That's from Bloomberg. So ES is pushing higher on that headline.
Nice.
Nice. And if you're
Nice.
not already a
And
member, J Money doesn't sleep actually
he
and
does
trades
he
all night.
doesn't. This
oh
is also
man.
true. There's a gift for that.
I will say
Yeah.
the SBX fail breakdown or ES fail breakdown of yesterday could be a worthy thing to review and just show the power of that if you guys want to. I mean, I know that takes up time, but definitely a good example.
Yeah.
Yep.
I don't know. Yes, but S&P, you can kind of see it here. Um, as
Mhm.
J Money leaves the workshop to go trade. Priorities.
And
Uh,
alerting to all the members.
yeah, it's
Are
mostly
you
about the
actually
members.
trading?
It,
Okay, I
it's
was gonna
mostly
say.
about the members.
Mhm.
I mean, if you need, we can have
Uh,
Space Monkey go next before this slide.
no, no, that's okay. I, okay, so
Priorities.
the other, I will say, we've talked a little bit about this RSI hidden divergence. Just as another thing that we look at to kind of add a positive variable to a particular trade setup. And there's a lot of nuance to this, but I want to just start by saying, The one RSI hidden divergence is different than regular divergence. Those are two separate things. So you do have to be a little bit cautious about that. But, so using RSI, these diagrams do a good job. If you're seeing price is trending higher and making higher lows, but RSI is making lower lows, that indicates that price is becoming oversold quicker and easier at a higher price. So if you just think that through, if something is oversold but it's at a much higher price, that's a pretty bullish thing. That means that there's a lot of energy available to the upside, and that's the main thing that we take away from hidden divergence is whether or not, if we're looking to go long, we want to know, is there energy available for upside? Like if we're going long, we don't want the stock to be running on fumes and have not much energy available for the upside. So this tells us just if there's energy available, and like we've talked about before, you'd be surprised on sometimes you think something is too extended, but RSI hidden divergence tells us it still has energy for continuation. So, and it's just the opposite for bearish. So if price is making a lower high but becoming more and more overbought, that's a bad sign. That means it's running out of energy at a lower high, and it's going to struggle to have continuation higher if it's already getting overbought at a lower price. So we just use this as something else. It's this by itself. I don't ever just trade because I see bullish hidden divergence. It's just something that says I want to go long on Microsoft because of these other factors, and also it has room to the upside. Um, so it's just an added variable. Maybe it means I have more confidence in it. I use more size. It's just another check in favor of that trade that increases my confidence that it can work and that it can work well. So this is something that
Nice.
you can look at. It does take a lot of experience to kind of to look at this. I do have a video on YouTube about this that goes in more detail. That's helpful because it's a little bit difficult to wrap your head around it in the beginning, but it can be very helpful just as an added variable, like I said.
And
What
I
are the
was
time frame for this?
So typically, that's a great point. So typically, to be meaningful for day trading, you want to look at this on a 30-minute chart or an hourly chart. If you're looking at this on a 5-minute chart, that move will play out in like one or two candles, so it's not going to help you. So 30-minute chart, 1 hour chart tells you that it has energy available for the length of a day trade, typically, intraday, half a day, or a full day, something like that, that's going to be meaningful for you to actually have a successful trade and be able to make profit and that kind of thing.
Nice.
yeah. I would just add one thing. If you're new to seeing this, if you're like me, maybe I'm just not that smart, but I was so confused looking at this for a while. But I like the first time I saw it, I was like, you did an amazing job explaining it. But it's a little bit to take in once you see it. But I think it's become one of the strongest variables to our process every morning. It's really, really beneficial to learn. So I would encourage everyone to kind of take time to really conceptualize this and let it stick.
Yeah.
Um, I do have, in the interest of time, I do have an example of this I want to share. And I'll be quick. But just to,
Sure.
and Jamin, you can, I'll hop in at any point here. But just a quick, when Google had the quantum news, this was a crazy, crazy one, where you can see that so the quantum news was here. So the stock gapped up big, big gap up. Didn't really do a whole lot on day one. And you can notice the RSI. This is a 30-minute chart. And the day two setup was incredible. This was one of our best trades last year. In the pre-market, the stock started to fade a little bit, which in most cases for a lot of people will be like, oh, and I actually remember that day the market was holding up and other names were actually doing better in the pre-market. And Google was kind of fading. But you look at the RSI is super oversold. But here's the kicker is the price of the stock is at 185. The last time it was that oversold, like if you go back even to the day prior, it wasn't even this oversold, and the stock was 181. And to get anywhere close to that oversold, you have to go all the way back to lower 170s. So the stock is, 11.7% higher and as oversold. what after positive news, right? So we saw that and we're like, okay, we need to, be ready to hit that on the open. And then it even kind of moved beyond our expectations. Like we knew it was good, but it just had so much energy. And once it broke through those pre-market highs, it just ran really good. So just wanted to share like a live example.
Yeah, you could also you could go back to ES and show the results of the failed breakdown also.
Did you alert it? You
I
psycho?
I did not get it. I did not get it
Okay.
alerted, but it is a headline, but it's also you can see the momentum. It's a combination of a headline and, if you have all this short inventory underneath that low and you don't get follow through and now price gets back above the low and holds, the short inventory has to cover and then long start to come in and push this higher. So there you go.
There you go. If you would have
I think
hit
JM,
alerted that, I would have lost my mind.
I think JM probably just had a phone call with the Chinese government on that. Like,
Yeah.
all right, I'm on,
Could you
guys.
please trigger a failed breakdown as I'm describing a failed
As you're
breakdown?
talking. Incredible.
Nice one, Jay. I can't follow this. This is impossible.
Um, awesome. Awesome work. We are near the end. Space Monkey, take us home, man. What's an example of a playbook setup that you trade?
So one of the playbook setups that I trade are called earnings reversals or earnings offsides. And I'm sorry if I'm speaking, if I'm slurring here.
What is
It's
it,
pretty
two
late where I
o'clock?
am, but yeah. 2:35. But excited to share this with everybody. And this example is from ASDS earnings reversal. But before we get into the actual chart, just kind of a few things that I look for. And I look for these stocks after earnings. So uh, a lot of traders and newer traders, they want to try to catch that, big gap up or gap down. And sometimes it works, sometimes it doesn't. Actually, often it does not. But we've kind of developed here, what I've developed here is a way to take advantage of earnings, but the day two or the day one, so after the fact. And so what this tries to do is take advantage of, close to the open, a small gap down. And so the gap down on the stock would be, 1%, 2%, maybe 5%. And the smaller the gap down, the better. And what you do want to see is this quick, basically dominance by the buyers. You want to see them stepping in very, very quickly near the open. So within the first 10 to 30 minutes since the open, you want to see them stepping in. And, with it being down 1%, 2%, you want to see a red to green move, right? A quick red to green move. And the quicker that red to green move is, the, the better it is. And if you could just click on the chart, this is a good example from ASTS. I think in March of this year, March 4th, I think it was. And it's not a name that I trade often, but I did like the way it was acting in pre-market. And so that faint yellow area is the pre-market. And that black line, the 2490, was yesterday's lows, I believe. And you had an open just below that low. And this is like your first sign, right? It's a gap down. It's a small gap down, irrelevant of what the actual fundamentals or the earning data was. A small gap down like this always perks kind of my eyes, and I get very interested in this. And so what happened? First 10-minute candle, uh, red to green, broke back above 2490, and then it just pushed through after our highs. And you can see that after our highs became a little bit of a support. So that first 10-minute candle broke higher, and then we created a little bit of a bullish pennant. So the reason why I'm mentioning this is that if you missed that open drive, which Matei explained earlier, there was a secondary entry, which is this technical pattern up here, which is uh, often it is a bullish pennant or a bull flag of sorts. This is a pretty perfect bullish pennant. So you have to be patient. But once that pattern broke, that was your second entry for a pushback up to 30, 50 area. So this is a really good example intraday of how that works. And then to the right, you can see how, we open up. We had very little, it was very little downside after the open. As you can see, there's not a big wick to the downside is, open and go basically, recover that previous day low and push. But what's more important is that, these kind of plays often set up a multi-day trade, meaning after that day one, often you have to watch for the day two move. And so that is important because, let's say you missed that day one move, but the day one moved without you seeing it or you missed it. You can always look for that day two continuation move, which is basically the break of the previous day high. And that's what Matei is pointing out here with the mouse. And so, day two move was pretty much, as good perhaps as the first day move. And, I think I remember alerting this day two move also to all the members. So this is the earnings upside play that I trade often. Actually, most recently traded it with Spot just a couple days ago.
Awesome. The spot was incredible one as well. So literally it's identical what Space Monkey is just covering here. You can see on day one, a little bit below, um, big rip
Yeah, Spot was one of those where I actually missed the day one and I traded the day two.
this day too. Yeah,
So that was, yeah, a
yeah.
good example of that.
Nice. Awesome. Great work.
Thank you.
So before we get into the Q&A, just so everyone that's attended, we do have a sale going on for new members. So you can, take a look. We have a couple different options. The more time, the more of a discount we have. So if you are looking for a group, if you don't have a home a trading community that you're part of and you like what you're hearing, we do have a promo for you. So you can check that out. We'll send this link out for everyone so you can, read and review it. You can access the presentation and take some more notes if you want, refer to the recording, so on and so forth, and then take advantage of the promo if you'd like. Before we get into Q&A, anything else, John, maybe that we good? Did we miss anything? Anything important?
No,
Should we?
I don't think so. I just want to stress too for, anybody, all of our members, come from different walks of, life, different parts of their journey, right? Beginners, advanced, novice. We all have something to learn from each other. And we're here to help shorten your learning curve. So some of these topics might have seemed, relatively advanced and possibly overwhelming. But it's just kind of to showcase where you can advance and take your trading to, if you choose to go down that path. There's so many levels and there's always ways to improve, right, Matei? I think that you've really stressed that having the team and having members, learn the edge that you've, um, uncovered, right, has made you a better trader and evolved your trading strategy. So it's just been really cool. I just want to say thank you guys for doing such a great job with the presentation. We're always available via direct message. If you have any questions after this, if we don't get to you, please, send us a message on Twitter, twinsight_x, and we'll do our best to get to you. And besides that, Matei, I'll let you tackle as many questions as you are willing to. And Space Monkey, if you need to go to bed, please do.
Yeah. So yeah, if you guys have, thanks, John.
I'm not going to bed. Forget about it.
He's here for the ride. Let's
Staying up.
go. Let's go. Cool. But yeah, if you guys, it's been, hour 40. So if you're tired and need to hop off, the recording will be available. But if you ask some questions, we'll spend the next bit of time going through those and trying to do our best to answer whatever questions you have. So I'm gonna start at the top. I'm assuming that's first. So we'll start in order. Somebody asked, can you do one on gamma as well in the playbook? That's a great question. Um, I think for the sake of time and also edge, but we have this edge defined in the room. I'm kind of kidding, but we're actually really exploring some cool stuff with the gamma that I don't think a lot of people are, and there's certain events that have happened over the last year that you've heard me kind of ramble on about if you're a member in the room on how big of opportunities they are that happen at the end of the month or end of the quarters.
Yeah.
There's some pretty impressive moves and in the last like 10, 15, 20 minutes of the market, I think there's incredible edge there that we're starting to uncover. So I would just like hint at that. As far as gamma goes, it's basically a way to visualize and actually quantify market dealer positioning. That's not something that's been available for retail traders that I'm aware of ever. So to be able to kind of access that level of information is really cool because, as one example, a quick example, just the other day, we had this just yesterday, right? Or 2 days ago. I don't even know what day it is anymore. Wednesday, right? Yeah. Wednesday, which was yesterday, which was yesterday. We had this big move into the close, and this isn't random. So a lot of people are like, oh, it's insider trading or legal trading. It's not. There's more going on. And what's cool is around as the gamma positioning was updating, we saw this. Again, I don't have, this is a good example of I'm in like the middle stages of this playbook trade, this edge that's being uncovered where I don't have the confidence to hit these trades with a ton of size yet. But you've seen myself and Space Monkey capitalize on some of these moves. It's can make multi-thousand% gains, which is just absolutely amazing. And the gamma, I would say we'll dive deeper into gamma. I'm working on a playbook for gamma right now. I can give, since you asked, which I'm thank you for asking the question. I'm gonna try to give you an example of something. So, briefly see this. So just this is going to be probably confusing for a lot of people, so I'll just keep it really simple. Gamma can outline basically areas of support and resistance based off the dealer positioning in the market. And this is one that on this day, whichever day it was, this yellow line is basically a path of least resistance that can act as a magnet or some support. And being able to see that, you can see how price reacted. It held above that at the open. It basically just grinded higher all day and then ended up getting pinched between some positioning into the end of the day. So this is what I call a polar bounce um, because it's polar is path of least resistance. So that we're wanting one example. This is an example. So we like to trade on these polars or peaks. It's just basically heightened maximum spots of exposure from market positioning, and looking to create a playbook that uh, revolves around those spots. So I've worked on defining this, right? I have, as you can see here, I'm starting to work on naming conventions for this. I'm looking at polar bounces, polar reclaims, peak bounces, peak rejections, different gamma environments, light gamma, negative gamma, flipping from positive to negative. We could get complex. I'm not going to do it here for the sake of everyone's brains tonight, but yeah, that would be one example, and also just a little insight into some of that edge.
I think I just want to one note on top of that. It's a really fun time and interesting time in the market, right, Mate, where these tools are getting exposed to retail traders, and it's pretty cool that we have a partnership with Options Depth, and they'll be doing more workshops with us and things of that nature for those who are interested in learning more. I just think it's very cool to be able to see kind of the discovery of this edge, right? You develop your playbook as you get better and better at reading and deciphering this. It's just something that retail traders have never had access to. So the landscape is changing, and something that I really like that you emphasize is that when there's edge, right, like, and when it's present, that's when you refine your approach, and you slam, and you make and extract as much money as humanly possible, right? Because your edge is always continuously evolving and changing with the dynamics of the market. That's something that worked last month or last year. It doesn't necessarily mean it's going to work today, right? And so asking questions, like what worked well today or what was easy money trade, and continuously refining is really what separates you, Space Monkey, everyone, in the group, that we're not just trading the same breakout or breakdown trades, right? It's you have to evolve. So again, just a small note.
Yeah, and that's a great point because it's everything that we talked about before is like I mentioned, what we're working toward, right? Like what's the cost of showing up every day is everything that you just said, and it's exploring edge and taking advantage of edge when it's present. It's good and bad news for some. Some people I want to learn this setup. I want to know, have a high win rate and it work all the time. The bad news is that's just not the market because you're competing with the biggest money in the world. So edge is constantly evolving. The markets are constantly evolving. Right now, I was very excited for earnings season, and yes, there's been some good opportunities, but a lot of them have been kind of honestly not very good. And so it's like, okay, this playbook that I have, I think we can go to it at various different market environments and it will shine in some and not do as good in others. But if you're not willing to keep an open mind of like where Edge is evolving, then you're going to fall behind, right? And those big opportunities that will become, that are more rare. And this is a good example of that, of, something new, something that hasn't caught on yet entirely, right? And being able to see what the big fish are doing, how they're positioning around the market, and then reacting to it is just really cool. So, um, but yeah, we keep an open mind, and hey, if it's just like everything I preached about, if something stops making money, it's our job is to ask, okay, what is making money, and pivot to that. So next question, how to lock profit and what is time to entry and exit? So, how to lock profit and enter and exit. Space Monkey. I
Yeah.
think this is the section of the things that will need to keep my reins on. Make me not
Okay.
ramble too much on some of these.
Yeah, no
So
worries.
yeah, so like locking
Okay,
profit
I'll
and
nudge
entries
you.
and exits. You want to take a shot at that?
I mean, you just have to do it systematically. So I usually take profits by percentage often, but also into resistance. So if I get a good entry and I see 30%, I'll just take a third off or a fourth off. But if price is getting into a resistance level and the percentage of gain is, let's say, 20%, it's prudent to take some off into that resistance because likely that green trade can turn red on you. So you just have to be disciplined, take profit, don't be greedy, and just do that over and over again.
Yeah, great point. I would add two things.
Hmm.
One is uh, taking partials and taking some profit along the way hedges losses.
Yeah,
Meaning, if you're taking a little bit of profit and then the trade fails, just statistically and in your data, you're just basically hedging losses. The ones that fail, the ones that just aren't great, right? The other point I would say is agree with everything you said. The one thing I would stress is it's relative to the setup. So this is everything that we talked about. If you don't have a setup, then how could you possibly know when to take profit and when to not? You're shooting from the hip. But if you have, an opening drive where your goal is to take the pre-market structure break, that's your entry, and your 5 minute candle bar trailing, and that's it. Like you exit, and that's your system. You listen to it, right? That's a
yeah.
simplified example, but it's relative to the setup. Whereas a swing trade, you're not going to follow a 5 minute candle bar trail. Like that just doesn't make any sense. So I would
Hmm.
encourage the person that asked the question to make sure that you're thinking relatively to the expectation of the trade. If you expect momentum, have momentum sell rules. If you expect a trend, have
Right.
sell rules. Use EMAs or whatever way you can quantify the trend as part of your system of taking profits.
Yeah, that's a good point. Good point. Yeah, I was looking at it from just a momentum trader, intraday trader. But what you're saying is 100% true. It's like you have to adjust those rules to the style of trading.
Yeah. All right. Somebody asked, maybe not a great question for the workshop, but would love to hear how Matei, Space Monkey, John, J Money each originally got into options trading. Oh yeah, I'll go first. I'll just keep it brief.
Yeah.
I think the biggest thing. So my dad was just kind of a hobby trader for years and following the market. So I was exposed to just the idea of trading from a young age. And then I think what really kind of accelerated that was um, just the challenge. So I started to kind of like look into the markets a little bit more and the prospect of making money like everyone else, right? So that the idea of making money and independence and freedom and all the things that a lot of like entrepreneurial people are attracted to is really what lured me in. And then I think what kept me here is the challenge. I, grew up in sports and am a competitive, person and like a challenge. And it's probably one of the hardest things to accomplish or be good at consistently. And so I think this challenge and the ways that it honestly, to me, it's like a performance sport. It's just mental, it's not physical. A lot of the things that we talk about, even the way I structure my playbook, I think about it. It's like formations of an offense and reading the defense and that kind of thing, right? So I think the challenge of it, the opportunity to make money, the challenge has kind of kept me here. And then the other thing that's kept me here is the community. I think just the ability to improve. It really forces you to become, honestly, at least for me, I'll speak for myself, like the challenge of the markets and being good at it forces you to become a better person, I feel. I think it challenges you in your life to build better discipline, to take things more seriously and just strive for greatness and all the things that you do. So I think that's some things that stand out to me. But I said I'd be short. I don't know if that was short, but um,
Hmm.
anyone else can weigh in.
Yeah, I can jump in. I mean, for me, come from I don't have any parents in trading, never really was exposed to that kind of thing. Uh, come from like humble background, working family. But the financial crisis, 2008, 2009, just opened up my eyes to the markets. Big chaos, a lot of stuff everywhere in the news regarding the market, and you saw these big companies just folding. And at that point, I was like, wow, wouldn't it be cool to just buy this because the market is rigged to go up? And that was like my first kind of insight. And then a few years after that, I got into trading, crypto, Bitcoin. Um, I liked the volatility, but it was a little too crazy. So got into Forex, was a little too macro for me, and then progressed into penny stocks, and which I did well. Just wasn't in love with the pump and dump kind of culture of that, and then stumbled upon options. And then after a year or so, found John and Trading with Insight, joined that community and just kind of took off from there. So now being able to be a part of that community is super rewarding, super exciting. And options for me is a great kind of mix of, volatility, but also certainty within the uncertainty in a way, meaning like you have a defined risk when it comes to options. So if you're, ready to, if you're okay with losing 500, that is what you can lose at the max if you follow your rules. But the upside is pretty much unlimited. So if you become really good at options, I think that is a very kind of exciting prospect. That's my journey.
Awesome.
Cool. I'll just quickly pop in. I know we have a million questions, but do you just
Yeah.
kind of want to share, how we kind of all ended up here together? So worked at a bank when I was younger, but always had a love for technology. But while working at a bank, I was, in front of money and followed the stock market very closely. And so as soon as I could open a brokerage account, I started buying, whatever stocks I could kind of afford. I do have a funny stock that I wish I never sold was AMD from $3 to $9. Just some will haunt me forever.
For sure.
But that kind of just really set me up to just have a love for the market and the challenge and just watching money compound and gains compound. So in about like 2015 or so, after I graduated computer science and business, I started trading stock options. Was really infatuated with the challenge. It's kind of UVU. It's very similar to golf in many ways, which is a sport that I love. And seeing the the uh, the possibilities that what options can provide, was really attractive. Went through ups and downs, learned a lot of lessons. Then really kind of started following the Twitter space a lot, and saw that there's just there's a lot of potential to make money with options. And in 2018, started trade with Insight, and that was one of the best decisions ever could have made. Was able to take everything that I learned, throw it into an ebook and work with, talented people and people who are, really wanted to help others succeed in the space. And so, I don't know, just being surrounded by Space Monkey Mate and all these, wonderful people, I've made lifelong friends, have helped and had the ability to help thousands of people. And it's been one of the most rewarding parts of my journey, of life. And so, it's just, yeah, it's a really incredible space. Couldn't be happier to have it. And obviously making money trading is a powerful tool.
It's awesome. Fun fact for everyone. I can confirm that John cranked a 300-yard drive recently, so just throw that out there.
That's 340, 340.
340. DeChambeau over here.
Let's not forget that. Yeah.
Yeah. No, that's awesome. Um, all right, next question. I'm here because I have also started out, have nearly blown my account, the fear, and now trading super small is not working out yet. How to get through this phase and regain my account? Um, it's a tough one. I mean,
Mm.
I'm sure all of us have blown accounts. I've vividly remember going from like 2K to 6K to 2K to 8K to 2K to 6K within like a 2 month time frame. It was like brutal. Um, and it is difficult. There's no other way around it than that. I think it's when you're trading with your back up against the wall, it's tough, you know. I think that some of the things that we've covered in this, I hope will help you with that. This was a question asked pretty early on. I think taking it slow is important, but building up confidence in edge and in your edge and establishing your edge, it doesn't have to be with much size. You can trade shares. You can trade 1 to 3 shares, right? And just build the data to have the confidence because you can really compound gains quickly in the market when your edge is there and it's working well. So, it also depends on your account size and all of that. Some people, you might have a $500 account or 5,000. I'm not quite sure what your case is, but make sure are using risk that, and if you have to save up a little bit, risk that you can afford to lose. And if you don't have that yet, it's okay to take your time and establish a playbook. The confidence will come from seeing setups work consistently, and you can scale that. That's the beauty of the market, and one of the reasons that I love it is it's one of the most scalable businesses you can start, right? Like there are points at which you could hit liquidity issues, but you're having some really good problems if you're having those problems. Like it's a very good problem if you're faced with liquidity, getting exit liquidity and stuff. So it's virtually scalable with no real massive ceiling for most people. So um, that would be my encouragement to you. I don't know if you have anything else to add, anyone, but if not, we can continue.
Yeah, let's keep going.
Cool. Let's see. Is there a way to catch yourself when you are on tilt and now breaking rules? I've blown massive account after trading on tilt from a loss because because of internet connection. It's relatively small, 5 to 10K, but went on to blow 60,000 in a few days. I found logic goes out the window and emotions take over. Do you have anything to help take you out of that, or is it something that you need to work on ahead of time? It's a fantastic question. I can relate to it. Been in those kinds of scenarios before. The internet connection kind of that definitely blows, and that's the one thing with there are things that you can do to be kind of prepared with your orders, just to eliminate that risk for sure. Um, but this goes back to what we talked about in the presentation. So hopefully, this resonated well with you when we were talking about this year on how a winning streak can be considered a loss if you broke your rules and reinforced bad habits, right? So it works with losing trades too, right? Like your decision making and emotions are super important. Tracking whether or not you followed your plan is super important because if the alternative is those mistakes, that is the fat tail risk in trading. If you go on tilt and you blow your account, it's all for nothing pretty much, right? So some of those points are super important. Uh, to give you something more concrete to, action item, look at some of the systems in the Notion template. You have to have systems for drawdowns, just as much as you have systems to take profits, journaling your trades, looking at data, yada yada. You have to have systems for drawdowns. If you make 2 or 3 mistakes, right? That should raise a red flag or yellow flag. And if you make more, you're down 10, 15% from your prior peak in PNL. You have to throw a flag out, like a red flag, and say, okay, so whatever I'm doing, whether it's the market or me, it's not working. So I got to reduce my size by 50% or 75% until it starts working again. This is an incredible, you know, incredibly beneficial thing to like have listed out. I recognize that, even if you have those systems, sometimes you can go on tilt. There are brokers that you can literally set a closeout. Like if you hit down 2K, you can have the broker literally not accept orders. If you need a broker for that, Centerpoint does that. They use Dash Trader software, and you can customize that. Works for options and stocks. They have good rates. This is not a promotion or a plug, but I've used them and I know you can do that. So if you are really concerned of going on tilt and are afraid to repeat that, even if you have systems for drawdowns, I would highly encourage you to use a broker that you can hard limit your days.
Nice. Hey, Matei, just in interest of time, I'm going to read some of the questions for you to answer, and I'll jump
Cool.
into if you need me to. Just make sure we cover as much as we can. So
Yeah.
one of the questions is, what do you suggest for someone who can't join the voice and have 9 to 5 and trying to copy trades as they see? And somewhat relatable, how can they take advantage of the service if they're unable to stream chat all day?
Yeah, yeah, it's a great question. I think it's important. The biggest part of that is preparation. So even if you're working a 9 to 5, we have a daily market recap that we send out every night with all the stocks, the key levels, and all that what we're watching. And then in the morning, before 9 o'clock, even we have a morning note with a watch list and a
Mm.
detailed game plan. So what I would encourage you to do is there's one caveat and first step to this is you need to have at least some kind of understanding of the playbook that you're trading. All these other things that we talked about are still true. Um, it doesn't mean like you could spend a couple weeks just like really familiarizing yourself with some concepts, and have it just a simple like simplify with one or two setups that make sense to you, and then look out for them. So when you see in the morning prep something aligns with what makes sense to you, then you can prepare for it, and execute on it. And if you know you're going to be in meetings or you know you can't capitalize on opening drives ever because you have a meeting at 9:30 every day, then don't trade opening drives. It's that simple because there are
Yeah.
plenty of other ways to get involved. Trade like on ASTS, that bullish pennant that's set up. Intraday opportunities on stocks F catalyst are great and are always for the most part, always there, and especially during like earnings cycles or big narratives in the market. So like these intraday setups you could watch. Now, if you're thinking to yourself, okay, that sounds great, but what if I have to step away for a meeting or something like that? Most brokers, like Thinkorswim, I have a video on this. You can create conditional orders with brackets. So you can say, okay, I want to buy, Spotify 610 calls over 600 with X amount of size or contract amount. You can literally choose between the two, and you can put in orders that it automatically takes, you know, a third at 20%, a third at 50%, and a third at 100%, all while keeping a stop loss OCO at say 30% stop loss. And you can put
Yeah.
that in, enter it, enter the order, and literally walk away, right? So like there
Yeah.
are things that you can do.
Yeah. Cool, cool. Next question would be, how would you grade today's Eli Lilly sell-off, LLY?
LLY. Good. I know that. Sarang called this out. It's a really nice
Mm-hmm.
call. I'm frustrated because I feel like I'm not aligning with the ones that end up working well.
Mm-hmm.
Um, but yeah, this was good. I'll just quickly run through the variables here. So this was a 7% sell off. Anybody have the implied move for this today? Um,
I don't
implied
know.
move. I'll just ask Rock real quick while I'm looking at the rest. So
Okay.
um, I usually start with a daily. So you zoom out, ask yourself what the structure is. So with this, we're just in a huge range. The weekly will paint a better picture of this.
22
So
points, by the
very
way.
okay. Thank you. Very big range for the stock on the weekly, right? On the daily, we've got a big gap up on news and this big run into earnings. So it's floating higher, looking pretty good, and then it gets a negative catalyst. You have this gap fill below. So technically, stock was near term strong, but bigger picture and a pretty huge range. So it's kind of messy. So that's like kind of a negative. It's not a great thing. Then you're going into earnings. You have the earnings report comes out. and you check out the RVOL. It starts at threes, building anticipating earnings, and boom, the earnings comes out. You're trading 15 times the normal volume, so very elevated above normal. And I would say this has been trading pretty decent volume overall, um, just because there's been news around the stock lately. Your pre-market structure, you have this kind of trending pre-market structure. You have the first move down, and you're just kind of trending lower, and consolidating near this 858 key level. So those are all positive things. Let's see. RSI. Okay, so this is a good one. So at the open, this is a little harder. It wasn't super bearish. So if you would have gotten this first move up like UNH, that could have created a front side short opportunity, but you didn't get that. If you check out the RSI, um, it stayed pretty oversold. So it did make a first move down, but that's not something for the opening drive I'd be very interested in. However, intraday, once we came and back tested this key level that it broke from, check out the RSI. So this is way more overbought at 850 or 8, I'm sorry, 842. Compared in the pre-market, you had this little bounce to 858. Look at where the RSI is. So you have much more bearish RSI, and then you obviously get this nice turn lower. You can risk this high and take the turn. So I would grade the variables overall pretty darn good. John said the implied move was, you said 7 points? Or 20 points, sorry?
20-ish, correct.
I don't know where 7 came from. So implied was 20. This move's 70. So that's phenomenal. That's awesome. The R ball shows that. I would give this A minus, at least. A to A minus variables. Very good.
Cool, cool. All right, so there's a question for me, Mate, if you don't mind. The question is on SPX trade. I noticed that Space Monkey used strike price out of the money, and he can tell whether the premium price is expensive or not. How far out the money would you use, and what premium price do you normally use for zero DTE? So there are a few questions in there, but just like keep it simple and quick here. Um, I usually have an idea of what an option price should, cost, and I think that's just through experience and watching premiums on SPX specifically over the years. So it's hard for me to kind of to quantify it here in the call, but it's just something that you learn. You get a feel for how things should be priced, fairly. And if it's unfairly priced, then you know that there's some sort of imbalance there that you can trade. Second is, as far as strike price, I try not to go too far out, but I do like to keep my options price around 2.7, so 270 to 320 per option. And usually it lines up really nicely with like where I think price will go. So if you think that SPX will move to 5650 and price is trading around 5620 at like 3, like those are things that kind of line up in a way which makes it attractive, right? So that's that. Let's see. The second question by the same person is, how do you set stop losses on zero DTE? So the first thing I would say is, I rarely trade SPX as my first trade. If I have profit, I will trade SPX with the profit, and I usually, use a certain amount, a percentage, basically, of my profits. And often I size for zero. And I know a lot of people don't like that term, and I actually don't like it either. But if you're okay with losing what you have in the trade, it just makes it so much easier for your trade to play out. And the reason for that is that SPX 0DT is so volatile that it's really hard to have a good stop in place, because often what happens when you have a stop is that you get stopped out and it runs to where you thought it would. So the trade plays out. Now, I do have stops sometimes, and it's a bit complex to explain, but sometimes I feel like um, if I'm trading against the lower day, and so we're a couple points above the lower day, and I'm trading against it, similar to what J Money explained earlier with a failed breakdown, where you have to stop below the low, you can kind of estimate what the percentage is. And sometimes it's less about the percentage and more about the level that it's breaking to the downside, right? So that's just one kind of example of that. And that's it. Mate, uh, talking about systems and models, is it fair to think that one should build various ones for different scenarios? Or would you say that this just complicates things?
It depends what they mean by systems and variables. I think it's it should be relative to the setup and what the expectation is, though, right? So,
Hmm.
your playbook should be it should align with the goal of what you're trying, what the setup is, right? So, like, you don't want to apply like momentum cell rules to a setup that is consistently trending. So I would encourage you just to ask yourself, like, whatever concept trade or setup you're looking at, what does it normally do? And then that is what will build the framework for how you systematize your cells, entries and exits, and manage it. And make sure you're tracking it, obviously, as well.
Yeah, cool, cool. Um, can you explain what you meant by the 5-bar trailing or the 2-bar trailing when it comes to taking profits
Yeah,
or stopping out,
100%.
I guess? Yeah.
Yeah, yeah. So, good example of this is ServiceNow. So, um, it just simply means it's a way to quantify um, trailing momentum. This is a very easy way to do this. So in the case of ServiceNow, we'll look at 2-bar and 5-bar. Um, okay. All right. So the idea is just simply that on a trade that you expect momentum. So this applies only to trades that you are expecting a big move. You're looking at the current candle and you're basically just saying, hey, as long as this candle closes above the prior, I'm gonna hold. And it's just that's it. It's a simple way to quantify that variable, or I'm sorry, that momentum. So in the case of ServiceNow in this opening drive, you have this first 2 minute candle, then the next one it closes above the prior, so you hold. This candle closes above the prior, you hold. This candle closes. You're just following that, and the 2-bar doesn't close until here. So really easy way to
Hmm.
trail. You enter on the opening drive over this pre-market level, and you're essentially catching 29 points. I know a trader that literally, like, I like to do, partials into strength, and then trail like a 2-bar or something like that on these types of trades, and then hold, maybe a quarter, an eighth for the trend move, the bigger picture. It doesn't have to be a perfect science, but I do know a trader this is all that they do. That's all in here, all out there. That's it. It's that simple. So I say that because I don't have all the answers or what's the most efficient. That's something I strive to find. And these are just questions you should ask yourself as you're building out your playbook. And I would also encourage you as you're building cell rules. If your cell rules aren't performing well, it's better that you have them than having the best ones. When what I mean by that is the expected value for a trade, you're trying to capture as much expected value as you can. But especially when you're new or like I have a new setup, don't be too critical of yourself. If you have a plan to 2-bar trail going into the trade, 2-bar trail it. If it ends up doing something way better, then review it. And if that happens again, okay, now I'm taking notice. And 3 or 4 times, it's like, okay, this cell variable clearly isn't optimal. I'm only capturing 40% of the EV every time. I want to capture 70. Then you ask yourself, okay, what's another method for capturing more profit? And you try to define that.
Hmm. Awesome.
Yeah, that's it.
That's a good example, man. All right, next one for me. I'll give you a little break here. How do I break my habit of trading zero DTEs? I think it comes down to data and tracking your trades. Just going back to what Matei said earlier, it's important to track your trades and understanding what works and what does not. It's as simple as do more of what works and do less of what doesn't work. So if you're noticing that your zero DTE trades are just not working, right? So let's say that, the majority of your trades that you're taking zero DTE are not working, stay away from it. That's a really simple way of just increasing your win percentage. So if it's SPX zero DTEs, or if it's as simple as like not trading on Fridays with weekly trade, options, then just take the day off. Just don't do it. Or on Fridays, if you don't want to trade zero DTEs, you can trade next week's calls. And so I always encourage people to track their trades, look at the data, be honest with yourself, which is a hard thing to do. But if you notice that you're just not, you know, uh, as good as, if you're not as good as, trading zero DTEs as you are like next week calls, then you just have to say, okay, I can't do this. I'll uh, I'll just look at next week calls instead. So track, figure out what works, stick with it, and ignore what's not. And you can always revisit things. So if you like the idea of trading zero DTEs, but at your current moment you just are unable to do well, take a break, and you can always revisit at some other point.
Great answer.
Any other questions that you want to answer here, Mate?
There was one, I think, where was it?
How are you finding trades with the highest, best EVs or EV?
Yeah, that's a good question.
Yeah.
I mean, for me, for the efficiency side of things, like a lot of the best trades are catalyst trades for me. And so I would say, how do I find them? I have
Mm-hmm.
this stock screener on TradingView.
Mm-hmm.
And I just in the morning see, okay, what's gapping up or gapping down the most. I start there, and then I look at the variables, and if there's a UNH, and I know that that has a lot more EV because the variables are stronger. So it's pretty simple,
Mm-hmm.
as far as that goes. I can get a lot more nuance than that, but I would say that's a good place to start. And then also just scanning the market, looking for anything intraday that has relatively higher volume,
Mm-hmm.
is a good place to start with that.
Yeah. Good stuff.
Oh, here's the question. I think it's just easy to answer. Um, Jimmy said maybe this is broker based, but how do you trade multiple accounts and get quick fills? Do you have tools, hotkeys, hardware? Uh, um, Schwab, Thinkorswim specifically, perhaps. Thanks. Yeah, good question. I do have that. So with Centerpoint, I actually have a Stream Deck set up where I have literally I have a video on it. If you remind me, I can dig it up and send it to you. Just send me a DM on Discord or Twitter. There's some really cool stuff you can do with the DAS trading software, like to the point where you can literally like say you want to get long on ServiceNow in the open. You can double click the chart, it sets your stop, hit a key, and you automatically enter the amount that you want to risk with a stop placed, and it calculates the amount of shares or options that you need for you based off where you click to have your stop. It's configured to know how much risk you want, and you can even attach sell rules to it too. So it's like there are things you can do. So that's the answer to the speed on other accounts. And then yeah, I mean, then otherwise I would with Thinkorswim just get used to using the active trader. You can set up hotkeys for that, or you can even save templates of OCOs and bracket orders to make things more efficient. I think one thing not a lot of people know about is the conditional orders. You can create a conditional order that if price crosses XYZ, attach a bracket order to it with OCOs. So that there are things that you can do leverage to be faster. Um,
Mm-hmm.
it depends on how advanced you want to get. If you want to get very advanced, I don't know a better software than DAS Trader. You have to create some custom scripts and stuff, but with a little digging, you can figure it out. And ChatGPT is cool, so I'm sure it knows.
All right, so I think we've gone through a lot of these questions. I'm just doing one last scan here. We've been going for quite a while here. So unless anybody, sees any other questions that are worth answering live, I think it's a pretty good time to just say thank you to everybody. But obviously, what John said earlier, we're always available to answer questions. I think through X or Twitter works best. we can get to any questions that you might have there regarding, the session today or any other things when it comes to the membership.
Yeah, absolutely. Thanks, everybody. I'm gonna keep this open for just a little bit longer and just scan through it. Like, I think we covered most of it. Space Monkey, I agree. But thank you guys. It's been a while. We've been on for over 2 hours now, 2.5, and Space Monkey's almost ready for some morning coffee. So, if there was any questions that you guys felt like we didn't answer, please feel free to message us. I always want to make sure that everyone gets answered. But I think we got through a bulk of them and covered a lot of topics, like Space Monkey said. So, if you're a member already, we'll see you on stream in the morning. If you're not, check out the promo codes if you want to join and check it out. Otherwise, have a fantastic night, everyone. I think we can go ahead and wrap it up.
Yeah, thank you guys. Yeah, just to follow up with that, after the meeting renders, I'll be sending an email out. If you do just want to sign up now for the promotion, which will include the link in the email, but it's workshop.tradewithinsight.com/presentation. And that at the end of the presentation has access to the links. And thank you guys all for attending. Thank you guys all for the wonderful questions. Truly appreciate it. We'll be doing more of these in the future. But yeah, if you liked what you saw and you just kind of want to come hang out with us and learn and trade, definitely give us a shot. And Mateo, are we leaving this open for a little longer, or would you say?
Yeah, I'll hang around for just a minute. And just look, I'm gonna scan through and answer some of the any questions I didn't really look through. But yeah, we can. For everyone else, we can just go ahead and end that. But I'm just gonna read through them. But yeah, thanks everybody. Appreciate
All right.
you joining.
Thank you, guys. Good night.